I think there's still a bit more upside in terms of silver. I think it could go to about 19.20, so another dollar from where it is right now, more or less. And then it might pause. And this is a monthly chart. It might pause for a month or so. We might see on the daily chart 10, 15 days of sideways price action. And then we could get another big run up to about $36 change for silver. And so both of them have got quite a bit of upside potential. Silver percentage-wise is obviously way more, which is why a lot of people get excited about silver. Percentage-wise, it'll absolutely crush what gold does. But both of them are very bullish. When we look at the shorter-term chart of gold, gold is at resistance just like silver is. So the chart's bullish. I would expect 1 to 4 week pause or pullback, which is a very good thing. And then I think we see the markets rip higher.
UBS analysts have indicated that silver could benefit from the expected lower interest rates set by the Federal Reserve this year, projecting that silver spot prices might reach $32 an ounce within the next 12 months. They also note that silver remains undervalued, still 40% below its nearly $48 peak in 2011 and misaligned with current gold prices. ChrisVermeulen, the founder of Technical Traders Limited, remains optimistic about the potential rise of both gold and silver, particularly highlighting silver's potential for higher percentage gains despite expecting some short-term market fluctuations. He envisions a brief market pause before it resumes its upward trend. Moreover, with gold recently reaching new highs, silver also thrives, recently hitting a 5-year high against the pound. Vermeulen's analysis, which includes Fibonacci techniques, foresees a bullish momentum for precious metals, predicting that gold could continue to rise faster than inflation, evidenced by a 65% increase over the past 5 years and a 10 to 15% rise in just the last year. Looking ahead, he identifies significant levels for silver, including the COVID-19 low, suggesting it could surpass $36. Now, let's proceed to Vermeulen's insights from his recent interview on natural resource stocks. Please remember to subscribe to our channel and activate the bell icon for timely updates.
Silver is definitely exciting. The silver, the miner space, it's finally coming to life. We've had this beautiful run up and this nice pause, bounce off this pink line, which is the 20-day moving average, which I find is a very powerful tool. And more or less, we've had this big move. And I like to always apply Fibonacci extension to get an idea of how much momentum something has. So I'm using Fibonacci extension, which is a pretty basic tool. We can get an idea of where silver should go. And the way this works is based on Fibonacci theory is you have your initial momentum move to the upside, and then you have some type of pullback. And if the pullback or the bull flag pattern, which is typically known as the halfway point, if that is correct, then we should see a run all the way to the 100% measured move that is equal to the first run. So that is exactly what we've seen literally as of you and I talking today. We hit that 100% measured move, 28.20, more or less for silver. Mentioning this actually earlier this morning to a few people that the precious metal space has had an awesome run. Gold has now hit its 100% measured move. Silver just hit it today. Miners are overheated. They've had a big run. They're all up into resistance areas. So while we've had a nice run and everybody's excited, a pause or pullback here for potentially a week or two is actually a very good thing. So I like silver here. Let's jump to a longer term chart. Let's go to the monthly so we can kind of step back and look at a bigger picture here. If we were to take a look at the big picture of where silver should go next, the next decent run, we can kind of pick this low here, which happens to be the COVID low. And then we've got this high. Now this is using Fibonacci extension again, Andy. And the way I use Fibonacci extension is different than a lot of other people. I only use the 618 extension and 100% measured move. And I find if price comes up to the 618 and it pauses for a bar or a couple of bars, we almost always go up and hit the 100% measured move. Now, what's interesting is, and this happens all the time in the markets, the 618 is generally going to actually fall in line with previous highs. And that also is one of the reasons why it usually has a bit of a pause at that level. I think there's still a bit more upside in terms of silver. I think it could go to about 19.20, so another dollar from where it is right now, more or less. And then it might pause. And this is a monthly chart. It might pause for a month or so. We might see on the daily chart, 10, 15 days of sideways price action. And then we could get another big run up to about $36 and change for silver, which brings us right into this pivot high where price came up and found support here and then broke below it, hit resistance, So the measured moves are falling in line with really critical pivot points from back in history. Um, just to kind of bring it up, gold on the other side is showing that we should run to 2700.
Go ahead and pull that up if you don't mind.
Sure, yeah. So if we take a look at gold with the same type of analysis here, and we use Fibonacci extension, we take the low from this overall massive pattern, the high and this low, and we squish that down. It brings us up to about 2650. So somewhere in that range, gold should continue to muscle its way higher. And so both of them have got quite a bit of upside potential. Silver, percentage-wise, is obviously way more, which is why a lot of people get excited about silver. Percentage-wise, it'll absolutely crush what gold does. But both of them are very bullish. And when we look at the shorter-term chart of gold, gold is at resistance just like silver is. So the chart's bullish. I would expect a 1 to 4 week pause or pullback, which is a very good thing. And then I think we see the markets rip higher. Maybe they'll just keep going higher without that pullback here. But if I would mentally be prepared for gold and silver miners to pull back and pause, just because it's nice to be mentally prepared for when it happens. So you're not like, oh no, it's topping. You would be like, no, it's taking probably a breather.
Despite the delay in gold surge compared to miners, Chris remains optimistic about the energy sector, anticipating an uptick driven by geopolitical tensions and economic cycles. He predicts a significant rally for gold, silver, and oil, supported by prevailing market trends. Market strategists suggest that a global economic recovery is fueling a robust commodities rally in 2024, which could undermine the Federal Reserve's efforts to control inflation and may complicate its plans to reduce interest rates by mid-year. From oil and gasoline to gold and silver, commodities have started the year strongly, with some reaching levels not seen in years. Chris also discusses the potential for gold, silver, miners, and energy prices to continue rising, even if the stock market begins to decline, citing historical precedents. Gold is up 12% in 2024, outpacing the S&P 500's 10% gain for the year, and is on track to surpass the S&P 500 by the widest margin in a calendar year since 2022, marking a significant outperformance compared to the last year gold exceeded stock returns. Now, let's return to the interview.
Oil's on a tear. It's on its way higher. There was an early indicator telling us that oil was most likely to break out. And that was when we looked over at the energy stocks, because typically you see the energy stocks or the leverage play around a commodity break first. And of course, when we look, we saw energy stocks break out way earlier, and they've had a huge run to the upside. Oil broke out, much more delayed. And this is typically actually what we see, Andy, in the precious metal space. We generally see miners break out, and then gold kind of breaks out, and then silver catches up and rockets higher. But we're not seeing that in the precious metal space. So there's definitely a big disconnect right now in the miners and in the gold space. I think there's big institutions and countries loading up on physical gold, and it's holding its value. It's kind of changed that a little bit. But anyway, the energy space I still like. Typically we see gold and oil rally really strong near the end of a stock market, a bull market. Usually they rally very strong going into a recession. People get worried, and I believe all these things are happening. And I was listening to somebody talk about, it was a video, and I'm not a fan of all this stuff, but it's talking about how there's this massive war coming. I mean, I know we always have wars going, but they're saying all this stuff is coming together, and it's going to be this huge war. And of course, war means higher oil, higher gold pricing. I mean, those are like the war commodity plays. So I think we are in that perfect storm in terms of we are in a stock market, near a stock market top. We're near, I think, economic top. We got wars unfolding and things I think are going to get uglier. And this naturally, just because we're at the end of a stock market economic cycle, this is when energies and gold come to life. So there really is kind of a perfect storm kind of brewing for potentially a very big run here still in gold, silver, oil, based on just all of those things. And they're all in strong uptrends. So you definitely do not want to be betting against them. What could happen is we could actually see gold, silver, and miners and energy keep going higher, even when the stock market starts to go sideways and starts to sell off. We actually saw this in 2008. The stock market actually started going down for a couple of months. Gold, silver, and miners kept going up for a couple of months, completely bucking the trend. And when we see that, that to me is going to be like, okay, we are like weeks or a month or two away from, a major kind of meltdown in the stock market. It'll be a big red flag. So I do believe we still have a couple of months of higher gold, silver, energy pricing, even if the stock markets top out and start to sell off. And the stock market is getting overall pretty tired. The energy or the tech space is running out of steam. The NASDAQ actually gave us an exit signal last week. The SP 500 is hanging in there, but it is hanging onto a thread where the layers in the stock market, if you were to peel back just the price, there's a lot of money shifting out of the markets into defensive plays. The market here is, we might have that one more push and rally into May or a little bit further, but we are on the cusp of I think, exhaustion in this market. And if the market starts to go sideways or lower and precious metals and energy keep going a bit higher, that's like a huge red flag, especially for long-term investors, right? If you're in the buy and hold, you probably don't want to be holding, over the next year, because we could be in a huge correction. It might take 3-5 years or longer to recover.
For those holding on to gold and silver for the long haul, the situation remains unchanged. Both metals remain sensible investments in the current climate. Silver appears relatively inexpensive compared to gold, and retail premiums for silver have decreased. Now is not the time to be discouraged or misled by silver's slower price movement. Interestingly, silver, often referred to as the poor man's gold, is expected to catch up. How do you anticipate the ongoing commodities rally impacting your investment strategy, especially concerning potential opportunities in gold and silver? Share your thoughts in the comments below. If you found this video informative, please support our channel by subscribing and enabling notifications for our latest updates. See you in the next video.